right, here we go, and welcome. Welcome to the SPY T Trading Webinar 2023. I got to tell you, I'm so excited about this webinar because we have so much more insight and data to share with you as compared to the 2022 webinar. Each year, it just keeps getting better, more refined. Obviously, experience plays a big role in becoming a better trader. And with more experience and as the community has grown, more insights have been shared within the community that helps us all become better traders. So welcome to the community members. It's great to have you here. And for those of you who are here for the first time and have no idea what SPY T trading is all about, welcome to you. And let's just dig right in to help you understand if SPY T trading is right for you, because quite honestly, it's not for everyone. Who is SPY T trading for? Well, it's for those of you who, you want more control of your portfolio. Perhaps you've been a day trader, you've tried day trading, and it's just not working out. Maybe you just don't have the time, you have a regular job, maybe the emotional element is just driving you crazy. You just can't do it. You don't have the temperament for day trading, and quite honestly, I'm kind of in that camp myself. I really like the SPY T method because it gives me the opportunity to take advantage of what day trading can offer without allowing me to sabotage myself so easily. And we'll get more into that as we get into this process. But if you're finding that your financial advisors and planners are just not doing it for you, and you want to dig into a more aggressive style of trading, which SPY T trading is, well, this just may be the opportunity for you. So stick around. We're going to talk about what SPY T trading is, and at the end, I have a question and answer section, which is really my favorite part of the entire webinar because I really get to dig in and give some depth to the understanding of what this is all about. So, first of all, what is SPY T trading? Just to clarify so you understand. Well, SPY T trading is a very specific style of trading, and there are three main parts to it. The first part is the timeline. It's an overnight swing trade. And so you buy in the evening and you sell in the morning. And we'll dig into that a little bit more in the webinar. Part two, there's a specific style of trading. We use ETFs and options and we use ratios. Again, we'll get into that when we dig in deeper. The third part is an important part, and that's the signal. The signal that we use is the signal that we find over at spytomorrow.com. And it's available free for everyone at 4 o'clock Eastern Standard Time, right at the market close. And it will say either up or down. And you may say, wait a minute, well, after the market closes, what good does that do me? Well, I realize that some platforms don't allow you to trade after 4 o'clock. However, there are platforms such as Ameritrade, which is the one that I use. It's not a promotion of them. I'm just saying that's the one I use because I know it allows you to trade after 4 o'clock for about 15 minutes. So you don't have to be a member to get the additional information that's available. If you just want to know up or down, or you want to practice or paper trade, try out this system to see if it works for you before you become a member. It's honestly not a bad idea because we want people who find the value in what we're offering here to become members. So let's dig in and find out if you are the right fit to become a member of SPY Tomorrow. Okay, so again, question and answers afterwards. I'm pretty excited about that. And of course, those of you who are watching this webinar on demand, I'm going to throw some graphics up during the editing. I might even do a little light editing of the webinar just to make it a little bit cleaner along the way. So hopefully that all works out for you. And let's get into it here. So let's start with in the beginning. So we talked about this signal, and years ago, a few years ago, about 3 years ago, I opened up my old trading account and I saw that there's a little money left in it, and I thought, it's time. I needed to start focusing on retirement. I needed to build my retirement through the ups and downs, the Great Recession, just life. I was in a position where I need to really think seriously, and I need to be maybe a little more aggressive about this. And so I started playing around and started playing with some of my old ideas. And then I noticed something. No commissions, or very, very low commissions. And that allowed me to do some things that was pretty tough to do when I was trying before because of the tax of such high commissions. Even a $7 or $10 commission can be quite a percentage and be the difference between winning and losing. And so as I started developing this, I started playing with numbers, and through these numbers, I eventually started to notice a few things. First of all, I noticed one thing that you may have noticed. You may have noticed that the market closes at one point and opens at another, either up or down. Well, that is referred to as the market gap. And the question becomes, what if? What if you could figure out or have a high probability of knowing how the market might open the next day? Could you take advantage of that? And so I have spent years developing signals and improving signals. They've had great streaks and poor streaks. They've broken, and I've discovered so much that has helped me truly understand what these signals are doing, when do they work best, when do they have trouble. Again, these are things that are important to know because sometimes it's a good idea maybe just to not trade because you understand when your signal is working best. And you can use the SPY tomorrow signal. You don't have to use a SPY tomorrow signal. We'll talk more about that, especially in the question and answer, because there is a question about that, about some other approaches to this that are extremely valid and maybe something you might want to try. So, the idea is, look, what if I could increase my portfolio every month, 25, 50%? That would be amazing. You can start doing the math and you get pretty excited about that. So this one fact, that the market has this gap every night. And sometimes it's a big gap, sometimes it's a small gap. It just depends on what happens overnight. And there was a study, and this is one of my favorite graphs. And this study showed if you bought the SPY, let's say back in 1993, the SPY, and you bought it in the morning and sold in the evening and continued that process throughout, the 20, 30, how many years, 30 years it's been around, you would have probably broken even or possibly lost money. However, if you had bought the SPY in the evening and then sold it in the morning, now this is assuming you're pointing up. So if you're buying the SPY at night and you're selling in the morning, you're assuming or hoping it's going up. If you did that every night, every trading day, you would be up over 600%. So what does that tell us? It tells us all the action is overnight. All the action is not during the day. It doesn't mean the market doesn't go up and down and there aren't opportunities during the day. Of course there are. That's how day traders make their money. However, there's that continuous up and down, that emotion of watching a tick up and a tick down. The thing is, overnight, you buy and there's nothing you can do until morning. There's nothing you can do. You can't sabotage yourself. And that's what a lot of people do, especially with day trading, is they sabotage themselves because they don't have the temperament to hold on, follow through with their plan. They get worried. The fear and greed, fear and greed, and fear and greed continuously throughout the day. And there are day traders who do a great job and do have the temperament and great plans, but it's really hard to follow them. And quite often it takes years to develop your own style. So that's why I really like this overnight swing trade. And I think this graph shows so much. It really just shows you where the action is and the opportunity. So now you understand what it is we're trying to do. We're trying to take advantage of this overnight gap. And that's pretty simple. Very simple to understand. And there's more to it, and we'll talk about that as it relates to maybe what we're trading and when we're trading. But it's good to know that's the foundation. So how often does the market go up? Because we know that if you trade overnight and you're making money over that time, the market obviously was going up more times than it was going down. And the answer is, yeah, about 53, 54, 55% of the time, depending on the statistics that you're looking at. And so that means, what if we could develop a system that was right more than 55% of the time? Makes sense. And that's what I tried to do as I developed the SPY-T trading, or the SPY tomorrow signal. And I developed it again through trial and error. And many months it's 70%, sometimes it's 60%, sometimes it's running at 80% correct. And let me tell you, those are great times when that's happened. And that type of track record is certainly a lot better than flipping a coin. If you're going to do this overnight trade, what are you going to do? We'll talk about some other strategies that you can use, especially in the question and answer. But honestly, if you're looking at that market gap and you're going to take advantage of it, and we use options and we use ETFs. ETFs are exchange traded funds. And the reason that we use ETFs is because they are highly liquid. What does that mean? They're easy to buy and sell. If you put in a buy order, they're filled. You put in a sell order, they're filled. And what's also amazing with these ETFs, specifically the SPY, the QQQ, and the IWM, which are highly traded. I'm not saying all the ETFs, but these core ones are highly traded, very liquid, and so are their options. The reason this is so important is because if you don't want to get stuck in a trade. When you want to sell, you want to sell. You don't want to be sitting there for 10 minutes waiting for your order to be filled as the market continues to move on without you. So that's why we have a few options. Now, there are some stocks that you can consider. We'll talk more about them a little bit later. But generally, we've used the foundation of SPY. My algorithms are based off of SPY. Now, members can see what the QQQ and IWM also says, but the thing is, the algorithm for them is also still based off of the SPY algorithm, the system. It's not calibrated necessarily for them, although I show them. And it's relatively accurate. It's actually sometimes eerily accurate in terms of like the SPY is up, the QQQ down, and the IWM is up, and that's what it showed the night before. It happens all the time. We also have confidence numbers. We have confidence numbers that tell us, okay, there's a lot of pressure this way. Remember, the indicator is measuring pressure at the end of the trading day, which often correlates to how the market might open the next day. And that pressure could be great or it could be small. And if it's very small pressure, maybe just a little bit up, well, then it could easily be pushed back down overnight, especially if we know that there is big news the next day, or there's news that could change it the next day. So we have to be aware of the news and what could change overnight, because that is how the market or the technical indicator, the SPY-T pressure reading, can be wrong. It's measuring at that point in time, but between the point in which we take that measurement and the next day, so much could happen. You could have economic news at 8:30 in the morning. You could have a big event overnight, and on the other side of the world, stocks are trading overnight. The other parts of the world are open while we are asleep. And so that's where that gap comes in. Obviously, the U.S. market plays a big role in really setting that foundation, but still, anything could happen. You know, sometimes earnings like, Google comes out, or Tesla or something like that, that could, change the mood of the market. And if it does, those earnings don't go the way the market was expecting. The market does not like the unexpected. The market likes certainty. And so when we get unexpected things, it can change the mood of the market by the next day. So it could never be 100% correct. It's just impossible. However, we do a pretty good job of saying, look, we measure it at this time, and in the morning, within the first half hour, we're going to be in the direction that the indicator said. Because sometimes, look, the indicator may say up, and it starts a little down, but the pressure pushes it up. And sometimes it stays up, but eventually works its way back down. But the opportunity is there to sell with a profit. And because we have a ratio system, we can sell on days in which the market starts down and then goes higher, and the other way around, because we have really dogs in both races, if you really think about it that way. Okay, so I think that the next step here is to talk about SPY-T trading itself. SPY-T trading, in all sincerity, was developed out of the need to protect when the signal wasn't working as well. Now, I have made 1,000% over 8 weeks. In the webinar 2022, I showed you that graph where it was just a little over a year ago. In 8 weeks, during just the beginning of the war in Europe, we did just like 936%. It was something like that. It was close to 1,000%. And I was going directional. And directional can be great, especially when there's not a lot of news and the indicators are doing really well. They're on a roll. Hey, you can put on some directional trades. But the thing is, there are going to be times where it's not doing that well. And if it's not doing at least 70%, directional can really get slammed. And so there were some times where it was getting down to that 65% correct, which is far better than that 55% needed. However, if there were some big down days and you lost a lot on those big down days, it could just not be a good outcome. And so I really said I need to develop a way to hedge. And so I developed the first thing, and it's my biggest video, and a lot of people have found SPY Tomorrow through this specific YouTube video. And basically, it's what we refer to as the SPY-T A-trade. And that's the foundation, and that is the core of the SPY-T trade, which means we buy 2 calls, if our indicator says up, 2 calls to 1 put. And that put is the hedge in case the market goes down. Maybe the mood of the market changes. There's economic news. Whatever it may be, it could happen. It could happen multiple days in a row. And that's what really kills directional, is when that happens multiple days in a row. And that's where we have to get into position sizing and things like that, which again, we'll talk more about in the question and answer. But the thing about this is that it worked really well. And when I first implemented it, I did 25% the first month and 25% the second month. And then the next month, it was August, things were a little flat. I wasn't doing quite as well. And I thought, what if there's some other variations of this? And it turns out that there were some good ones, some that worked better than others. And I refer to them as SPY-T-B. Obviously, we had SPY-T-A. I named that one SPY-T-A. In the beginning, I didn't call it that, but then it's the first one, so I call it the SPY-T-A, then SPY-T-B, then SPY-T-C, SPY-T-D, and later the SPY-T-S. Now, again, the data has been helping us to understand what's going on. When I developed these, this was in the fall of 2022. And there's a lot of volatility. The VIX was high, And I did some tests, and I do studies, and we do regular studies to see what is working better. And I share that in the community, let people know, or I might do a video on it on YouTube for the public. But I share these informational studies to help us become better traders as we learn more and more. And it really looked like SPY TS was the most stable. SPY TA during this time, in the first test, it actually, because we used the test in which we were pointing up. We just assumed that always that the indicator pointed up, just to keep it clean and simple. And there were 11 down days and 10 up days, which means it was only correct, in theory, 47% of the time. And SPY TA was up like 4%. It wasn't that much. But what was really impressive is that the other ones, the SPY TB, SPY TC, D, and so forth, and S, were all up dramatically. Well, and even the straddle and the strangle were up a lot too. But that was because there was a lot of volatility. And they are good during volatile times, just like the straddle. So some big days, the straddle moves. A straddle means it's a neutral position. You buy a call and a put of equal value at the same date, expiration date, and that's it. And so if it goes up or down, you can make money. But it has to make a good move. Well, as we got through the fall and into December and January, the volatility started coming down a lot, and those trades were not working as well. And so I started doing some more studies to see what was working. Is there anything that really could weather through the lower volatility times? In comparison, let's say in the fall, the VIX was at, say, around 30 plus and a little minus, when by January or February, we're in the teens, which is a very low volatility. And so with these new studies, I started to test some other expansions of the SPY TA strategy. And the SPY TA held up really well. And that helped me to develop the SPY TQ. And then I developed some variations on that, the SPY TAH and the SPY TAQ and the SPY TQ. H and the SPY TQQ. I mean, it's a combination of all this stuff I share within the membership. But the main thing is these are 2-to-1 option ratios, and the SPY TQ is actually more aggressive at 3-to-1, and it does very well, and they hold up really well over time through the more volatile times as well as the flatter times. And so it was good to see that, although, again, the bad news was most of those other trades that we had tested didn't hold up so well during the less volatile times. Except for the SPY TB trade was not too bad. And SPY TB is one that I still really like, and if I feel there is some good volatility and I don't want an expensive SPY TA trade, I'll sometimes lean over on the SPY TB, although the other ones I'm not using as much. And there was an issue too, and that was that I saw that the SPY TS was really stable during the fall, and I recommended a lot of people go into that. And I even developed the SPY T Challenge, which I'm renewing, but it will not have the SPY TS in it. That was actually a mistake on my part. I mean, this is the data that I had, but at the same time, obviously not enough data. And the data proved out that, yeah, during a volatile time, it's great, but during the flat times, not so good. And so now we're back to the SPY TA and those variations. And again, those variations allow for lower price trades, but still the protection of the SPY TA trade. And so that's what I think I'm excited about, knowing that through the different types of environments, this SPY TA trade or even SPY TQ trade can be very beneficial and allow us to make money. And as we get better, we'll even make more or minimize any of those losing days because we know how to exit those strategies, which we'll talk more about. Okay, so the benefits, one, after hours, you're able to put the trade on at the end of the trading day and you sell it in the morning. It's 2 trades and you move on with your day. That's really important to a lot of people. You just don't have the time, again, or the temperament for the day trading opportunity. It is aggressive. That's an advantage for some people. Not everyone. You can lose money, and you have to be willing to lose a little bit to gain a little bit at times, and know that there's going to be ups and downs and streaks going down and streaks going up. But at the end of the day, math is on our side, and that's why we like SPY-T trading. You have a much greater chance of succeeding, especially in my opinion, far greater chance of succeeding with SPY-T trading than you do with day trading. I just think that's a basic fact. Does that guarantee that everybody who does SPY-T trading is going to make money? Absolutely not. It's not a guarantee. It does take some skill to develop, but not as much skill is needed, again, in day trading and other types of trading. And we'll get into exactly what those skills are as we get further into this. Another thing is the hedge portion of it. Hedge trading. Now, I want to dig into something that I think people may be wondering, and that is, okay, when you're buying and selling options, when we talk about buying and selling, we're talking about buying a call and then selling that call, that same call. Sometimes when people talk about options, when they say sell, they mean sell that option to other people, the option to buy or to buy a call or buy puts or a specific stock at a certain time in the future. And that's what we're not doing that. We're not selling. Now, there are people who do that. We'll talk more about that a little bit later. But, we're just buying, and then we have a hedge. And that hedge, so if our indicator said up, we're buying 2 calls and we're buying 1 put as our hedge if it goes the other way. Now, some people would sell a couple calls and so forth. But the point being, if they thought the market was going to go down, maybe they would sell calls. But the point being here is that we're doing something that in teaching a strategy that's not going to put you in a position where you're going to lose more than you put in. If you put in $500, you risk $500, you risk losing $500. But some of these other strategies that are out there, option strategies in particular, you put in $500, you may owe $1,500 at the end. You may have a high percentage rate of winning, but when it goes wrong, it can go wrong really badly. And this system doesn't allow for that. You will never lose more than you put in unless you develop another strategy around these signals and this approach. That's up to you, but that's not what we're teaching here. The next benefit, I think, is the type of options that we are trading, the liquidity of them. We trade SPY, SPY, the S&P 500, QQQ, IWM that we talked about because they're easily bought and sold. You're not going to find yourself in a position that's hard to get out of. I mean, as long as the banking system and brokerages allow you to buy and sell and there's no major meltdown somewhere. And hey, there was a glitch one time with Ameritrade in which I could not sell one of my options and I watched that value go down. And ultimately it wasn't as bad as I thought it was going to be. But things like that can happen. So that's why you always have to be aware of your risk tolerance and be aware of your position sizes, knowing that something well beyond your control could go wrong. But in the general scheme of things of buying and selling, the normalcy of trading, these are liquid, easy to buy and sell. It's not a penny stock that we're going to find ourselves in and then find ourselves the next day that nobody is willing to buy from us again because it's turned to zero. That's not what we're trading. And so that is a big benefit here. The SPY-T A can weather many environments. We just talked about that through our studies. We're doing more studies. We're trying to find the best. I think the SPY-T A trade, although is more expensive, is one of the better ones, but the SPY-T H, which is basically half the value of the SPY-T A, or the cost, excuse me, is a good way to go too. Again, that can be explained more and is explained more in the membership area for those who want to really dig into the different types of trades. But there are times when, hey, when volatility goes high, those other trades, we know that there is value in them, but overall, we need to know better and understand through experimentation, your personal experimentation, which ones are best for you and when. But the standard is the SPY-T A. Next, the switch, the underlying move. So I went through a process. I started talking about, I opened up this account, I started doing the math, I discovered these pressure readings, and eventually they broke. And things seemed to turn reversed. And so I would figure these numbers out, and then they'd be fine for 30 days, 60 days, and then all the numbers would reverse again. So, up days were down, regularly at the same ratio that they were right before. So what is happening here? Eventually, I had to just turn everything off. There's one time when I first started SPY Tomorrow, I gave everybody their money back. I said, I got to figure out what this problem is, because it had been going great. I'd done a lot of tests, it was going great. And then about a month in, that switch again. And that's what it's referred to as, the switch. And I discovered what the switch is, and it is an underlying mood of the market. Meaning, if the switch is positive, there's a more bias to up moves. If the switch is negative, there's a more bias to down moves. And that it's a very helpful indicator among the many other indicators that we have at SPY Tomorrow. And so that was very helpful, knowing what the switch is, knowing what the underlying market bias is. Doesn't mean the market can't go up when the switch is negative. It just means there's more likely that it is going to go down or come back down when the switch is negative. And that's what we have found. There obviously there are ratios involved. It's just a bias. It's not a guarantee, but it's good to understand that, and you can apply that to other types of trading strategies too. The bottom line is it's math. It's just math, and we're trying to take advantage of the math by being better than 55% correct and using a strategy that amplifies the days that we are right and minimizes the days that we're wrong. Sounds pretty straightforward. If you can understand that, if you can understand that we're trading the overnight gap, we're amplifying this opportunity by trading options, liquid options, easy to buy and sell. And that we're using an indicator that is right most of the time, and a system that is right most of the time. If you understand that, now you understand why SPY-T trading can work for you. And now you have to practice. Now you need to try it out, paper trade it, and test it out. And if you want the confidence numbers, if you want what we refer to as the grand, the overall pressure, if you want to know what the switch is, if you want to know what the community is saying, if you want to be alerted if there's something to be aware of in the next day's trade, because sometimes it's just not right to trade. There are times in which it doesn't matter what you do, you probably should just step aside because there's news, economic news coming, and the premiums are so high that it's just not, even if the indicator is correct, it doesn't matter. You could still lose. And so it's good to know when those situations are, and that's where it's nice to have a community of people to talk with and share that information with each other. All right, now into my favorite part of the webinar, the question and answer section, where I answer questions that we find within the SPY Tomorrow community, the SPY-T trading community, within the social media, our YouTube videos and so forth, These are questions that are very common, and they may be your questions about SPY tomorrow and SPY-T trading that gives me the opportunity to expand on a little bit and add a little depth to this conversation. Okay, first question, if it's free, why become a member? You know, that's a great question, and the answer is you don't have to become a member. I mean, it's available, the up or down signal is available at 4 o'clock each day, Eastern Standard Time, and there are people making money off of the indicator just doing that. Never became members. However, for some, they want the access. People want the access to the inside information, all the numbers. At the beginning of 2023, I developed what was referred to as the heart, which is the new algorithm update. And if you want to see the heart and you want to see all the information around it, you can see that within the SPY Tomorrow community. You can see the grand, you can see the switch, you can see all the numbers that are not shared with the public that help us determine up or down. What is behind that up or down? Is it a strong up? Is it a strong down? Is it a light up? Is it a light down? Could it easily flip overnight? Well, with this additional information, you can help make that determination. Because you don't have to follow what I say. I'm just interpreting the data. You may see something. I show you all the different algorithms that we work with, and you may find one of the algorithms that works best for your trading specifically. And so you can dig in deep too and develop the system that's right for you. You continue to try different things. You know, start with the standard SPY-T trade, overnight swing trade, using options, 2-to-1 option ratio. You know, buy at night, sell first thing in the morning. But eventually, you'll have more opportunity and be able to expand upon that as you get comfortable with the SPY-T trading philosophy. And so there's a lot there. This is the community. You have access to the chat community to talk to other SPY-T traders. You have access to me to ask questions. Now, I can't give financial advice. I am not a financial professional. I'm not licensed in any way for that. But I can share with you where to find information. I can share with you, you know, any basic understanding of the SPY-T trade. I just can't tell you what to do. You're going to have to use the information that I share with you and come to your own determination of what the next step is. I mean, it's just the rules. You know, nothing I can do about that. Okay. Does the indicator tell the future? No. The indicator does one thing, and it does that one thing well. It measures the pressure at the end of the trading day. And that often correlates to how the market might open the next day. That's it. There's a lot of time between the end of the trading day and the next morning. But that pressure is a pressure of understanding within the market. So in other words, big money is playing a role in the development of this pressure. So where does the big money think it's going to go the next day? I mean, that is part of it based off of all the calculations. Now, these calculations have been developed and triangulated, and that's how we've come to this version, the heart algorithm. I mean, I call it the heart algorithm because it took really the best of all the algorithms and calculations that I developed over those 3 years and put it in one spot, and I use that, and it works really well. Perfect? Of course not. It can't be perfect. There's always news. There's always something, but it's well above that 55% or flipping a coin, and that's the idea. That's how we win. But there's another part to winning, and we'll talk more about that in a moment because it's an important part. Okay. How much should I trade? That's a great question. So it's important to know your risk tolerance. I often recommend that you should probably start with about $1,000. That way you can run with 25, 30, 50% of your portfolio in each trade. Now, if you have more in there, if you have $10,000, then maybe you're working with 10 to 20% of your trade. You don't want to overdo it. You don't want to overcommit in a way that could find you in a bad position. If you can't afford to lose $1,000, you probably shouldn't be a SPY-T trader. You're going to have a learning curve. Yes, it is easy. It is designed to be easy. Buy at night, sell in the morning. You can do that. But to really be a great trader, SPY-T trader, it takes more than that. Again, we'll talk more about that in a few moments. But you do need to understand your position sizes and your risk tolerance. And so I think minimum is $1,000 to start, and then you can build from there. I say, $1,000 because that way you can trade 50%, 30% of your portfolio with a real SPY-T trade that can be significant. But it's not always right for everybody to trade 50% of their portfolio. But when you only have $1,000 to make a significant move and buy safer options, I say safer, meaning you're not going to lose all your money with theta immediately. Theta is the time decay, and that's the downside to this process. And again, there's a good question coming up talking about that. There's advantages and disadvantages, and that is the overnight time decay is a disadvantage. We'll get into that more in a moment. So should I keep trading all of my money? Meaning, look, if you make money, let's say you have $1,000 and you end up making $1,500. Maybe take that $500 and put it in dividend stocks, put it elsewhere, savings account, just something outside of your aggressive trading account. Maybe in your Roth IRA, wow, or your some type of retirement account. What I'm saying is that don't just keep doubling down, keep using all that money. Use the money to make more money elsewhere. Maybe if you get really good and you end up with an extra $10,000, use it as a down payment for a piece of property. You see what I'm saying? Diversify. Don't put all of your eggs in the SPY-T basket. It's an aggressive trading platform. And we want to be successful for the long term. And we want to build that account. But we also want to take some of those winnings, because when you're doubling and tripling your accounts, it's not a bad idea to start to diversify some of that and just bring in some of the spoils, the dividends from a good quality stock. It's just not a bad way to go. And over time, that will be a big reward, because maybe you don't want to be SPY-T trading for 20 years into your retirement. There's going to be a point where you may not want to trade this way anymore. And so if you have other sources of incomes that have been developed from your SPY-T trading, I think that's a really wise way to go. So consider your Roth IRA or your traditional IRA and put that money there for the long term. That's one of my recommendations. Again, you have to decide what is right for you. Again, I'm not a financial advisor, so that's not direct financial advice to you. That's just, to me, kind of like a common sense statement. All right. Okay, can you lose all of your money with SPY-T trades? You should assume that you could. Always have that mentality that this is how much I'm risking in this trade and I could lose it all. Now, it is rare that I lose more than, say, 30% of a trade. And let's say you had $1,000 and you put $500 in because of that hedge. It's rare that it goes above 30% or even 25, well, maybe 25, 30%. It's usually the high end on a really, really bad day. So if you put 50%, $500, that would be 15% of the account. And the thing is, if it's a really bad day, it could go the other way and you could end up making money the other direction. And that's why SPY-TB is really cool, because it doesn't take much. Maybe, if the market goes the opposite direction by 0.75 or 1%, you're actually making money the other direction. So SPY TB can be really good that way. It's just not as strong in their flatter markets. When is that? Quite often, say in the summertime, is when you'll find a flatter market. And there's some solutions around that, and we'll talk more about that. But you can always lose that money if you make an error. Something could happen. So you should always at least have the mindset that it's a possibility. But because we have that hedge, the chances are that you will not lose at all. And chances are you'll be able to get out of it. So the chances are very low, but you need to have the mentality that it's possible. Okay, on to the next question. If this is so good, if this indicator is 70% correct, 75% correct, why don't I just go directional? Great question, and I have done very well going directional. It's still one of my favorite trades, and there are times I do. But the thing is, if we go into a crazy news cycle or we get into an earnings season that's not what the market expected, or there's just unexpected economic news, or who knows, over multiple days. And, the market at the end of the day looks like, all right, pressure's up. And then, by morning, because of the events overnight, it's totally down again, or whatever it may be. You get a few days in a row of that, well, that can really hurt your directional trades. And that's where you really want to get into very small directional trades, very small position sizes if you're going to do that. So the answer is yes, but just like anything, it goes in cycles. There are times we're running solid, literally 80% correct over a month's time. And there are times where we end up at 65% correct. Again, better than the 55, but if you're doing a lot of directional trading or even made some errors along the way, or you missed out on the big move that month, because a lot of times the big move or two during a month makes or breaks your month. The thing is, we don't want to look at our trades daily. Don't judge what you're doing daily. Look at it over a week or a month. And I think there's a question coming up like that, so I may repeat that because I think it's a good rule to have, to look at this as a month long, especially SPY T trading. I always look at it as a month. How much money did I have on my account at the beginning of the month, and how much did I have at the end of the month? And that's where we get into the 30-day challenge. And so the new 30-day challenge is coming out and will be available for everyone, and I think it'll be a good way. It's really solidifying the approach. That will be a YouTube video down the road, but you pretty much understand the approach right now. We've discussed a lot of it in this webinar. Okay, do you have to trade SPY, SPY, the S&P 500 ETF? And the answer is no. No, you don't. In the summertime or during flatter, less volatile times, I will look for other ETFs, or specifically, it can be stocks or other ETFs. We generally trade QQQ, IWM, and SPY. IWM is the Russell 2000. The QQQ is basically the internet, NASDAQ 100 stocks, that kind of a thing. It's the internet and technology stocks, and that's much more volatile than the SPY. So if the SPY keeps opening up with very little fanfare, either up or down, you might want to look at the QQQ, because we still do. This is an option strategy. We do need moves. We not always significant moves, but we do need the ETF, the underlying stock, to move in a reasonable direction to start making money. If it's flat, it makes it a little tougher. And again, get back into that. Some people will trade like Apple or Google, which are very key and big parts of QQQ and SPY. They're the highest weighted areas within S&P 500. The highest weighted is Apple, and the same with QQQ. So sometimes people will trade those highly liquid stocks. because they're kind of like the ETFs. They're very liquid, and they tend to flow the same direction as the SPY. Because remember, we have to, if we're going to trade something other than SPY, we need to trade something that correlates or generally trades with SPY. So if SPY is up, then this stock is up too for the most part. So that's something you need to consider along the way too. If you're going to step away from ETF, become more aggressive, or try something new just because you think it may work better for you, which it very well may. But we have to start with somewhere, and the SPY is a good foundation ETF and option to start with. Okay, what's the difference between SPY-T and day trading? That's another good question. You know, day trading has an advantage. The big advantage is that you can have stops. You can stop out. You can have a plan, and you have multiple opportunities throughout that day. But that's also the downside. Not the stops, but the emotional multiple opportunities. So, if you make a bad trade, well, it's very possible you make another bad trade to make up for the bad trade, and you get all emotional, then you just do things, or sometimes trade just to trade when you probably shouldn't be trading at all. Sometimes boredom alone will take a trader out. Seriously. Well, with SPY-T trading, you just have that overnight swing trade. And we do have a hedge to protect us, kind of like our stop. But it's not perfect. And there are situations where, all the options lose some value. And that can be a problem. But we don't have that opportunity overnight to sabotage the trade, getting in or getting out early before the trade matures. Now, the trade can mature more in the morning, and we can develop our skills to improve those trades, but that takes time. But in the beginning, we just start off learning, buy at the end of the trading day and sell in the morning. So what are some other SPY-T trades? Well, we've kind of gone through that. The SPY-T-A is important, the SPY-T-A-H. So what that means is if you did a SPY-T-A trade means we buy 2 calls just in the money and then 1 put of equal value. Sometimes it's at the same strike price, maybe it's a little bit less, or just out of the money. A SPY-T-A-H would be if that call was $4. Let's see, so if you bought a full SPY-T trade, and the call was $400, and the put was $400, that would be a $1,200 trade. Well, if you bought a SPY-T-H trade, you're buying a call that's about half price of that $4, so it'd be $200, and 1 put at about $200. So that cost would be $600. That'd be a $600 trade. And so a quarter would be a quarter of that. So that would be 100, 2 calls at $100, and so forth. Those get a little more riskier, and you do need some good volatility for those to work. So the SPY-T-A, the SPY-T-A-H work pretty well. The SPY-T-Q works pretty well through all situations. But as we increase the volatility, a lot of the other trades tend to work better. The first one I would go to is the SPY-T-B trade. If there's a lot of volatility and you're just not sure which direction things are going to go, but the pressure says up, then I would do a SPY-T-S trade. And it's kind of like a straddle, but we're leaning a little directional. But again, we need some real good volatility for that to work. My biggest recommendation is to pick one that works for you and not keep trading around the different SPY-T trades. Really just pick one that works best for you, and chances are that's going to be a SPY-T-A or SPY-T-A-H or SPY-T-Q. So you'll get there. You can start experimenting as you get more comfortable. Okay, when do you buy or sell your options? Well, we buy at the end of the trading day, at the very end of the trade, like the last seconds of the trading day, last 10 seconds. Now, as you get better, you may figure, okay, there's big news coming out right after the market closes, or you can see that there's a big run up at the very end, and chances are it's going to come back down after the market closes. These are things you'll recognize along the way. And you'll get better at buying and knowing when to buy. So sometimes you'll want to buy after hours if you have that option to do so. Again, like on the Ameritrade accounts. But as important as learning to buy well is, you will be successful as a SPY T trader based on your selling. That is the most important thing. In the beginning, buy. At the end of the trading day, sell pretty much first thing in the morning, first 5 minutes. But over time, you'll learn how to sell better to minimize your losses and to amplify your gains. And you'll use some indicators. I use VWAP quite a bit, which is an indicator that I will use if, for example, if I see that we're above the midline, I'll be more bullish. If we're below, more bearish, and I'll make my trade accordingly. And a lot of times, patience is involved. Sometimes you're just going to do better in certain environments by waiting the first 15 minutes. But we also have to remember that time is not on our side. There is a question, can I hold on to my trade throughout the day? And I would recommend that you don't. In some situations, if things are going right, maybe you'll hold on for the first hour to 11 o'clock or so, maybe even noon, but not much past that. If you want to continue on, just close the old trade account, use a new, put in on a new trade. And we have hourly indicators in the SPY Tomorrow membership. Actually, right now we have hourly and on the half hour indicators, pressure readings, which will help you decide maybe what you want to do at 3:30. The pressure is up or down. What do I want to do? Is it time to get out? Or some people just use them for day trading. Some people use those indicators during the day in the SPY Tomorrow community for day trading, and there's nothing wrong with that. It's just another benefit within the community, and so I think that's really it's a nice benefit to have, to see that pressure. It's a different style of pressure, but it does show the up or down. So over time, you'll get better to extend your gains and minimize even more your losses, and even take a loss and turn it into a win. It very well can happen that way. You can let's say the indicator at the end of the trading day yesterday said up and we opened down. Well, that put is making money, right? So we sell that put as the market's going up, and because it's going up and you have two call options, it doesn't even have to go positive. It just has to keep going up, and eventually it's going to turn positive, maybe halfway back up or so, or 2/3 of the way, or 3/4 of the way back up, and you can put a stop underneath them and let it ride up and maybe make money on the day in which the signal didn't start off correct. Maybe it takes a little while for it to get there, and you can gradually follow it up. That's going to take patience and learning how to place your stops and learning to read the market. There's a little bit of a day trading element there for those of you who wish to go that direction. And that is an option. It is an option to, play a little day trading, get some of that day trading desire, out of your system, and then go on with your day. But the number one thing is just, once you're done, be done and get out and do a different type of a trade. If you want to continue trading at all throughout the day. Okay, what might go wrong? Well, here are the three things that you really should look out for. When you see premiums automatically go really high from the day before, say you bought your calls at 300 and now they're at 500 the next day, chances are there's some big economic news or something's going to happen the next day, and they're kind of inflated. And those inflated premiums, even if the indicator is right, you could end up, breaking even, losing money because those premiums came down so much. Volatility came down so much overnight. That's called an IV crush. So volatility coming down quickly is one of the worst things that happens to us. Time is not on our side. That is, so holding on to them, that's why we don't hold on to our trades very long, because time, again, we buy short expirations. And the the expirations are generally 4 to 7 days. And so, so these are short-term options. So theta is ticking away pretty quickly. And so that's what we have to be aware of. News obviously is a big part of it. You know, overnight, if news changes the markets, that can be a problem and change everything the next morning, or strategy for the next morning. But you should always be thinking about what happens if the indicator is wrong. What am I going to do? What is my plan when looking? Usually I start looking at about an hour, half hour before the market opens, and I start to make a plan. If it turns out that, you know, market mood changed overnight, what am I going to do now? What is my next step? And the third thing that's probably the most detrimental to our trading, that's you and me. That's our emotions. Our emotions getting the best of us. Trying to fix bad trades has lost me more money than anything else. Let me repeat that. Trying to fix bad trades has probably lost me more money than anything else. So get out when you get out and let it go. If you have another trading idea, totally different, altogether different, fine. But don't try to make up for the trade that didn't go your way. Don't let emotion, because again, that's what hurts day traders, that emotion. Don't let emotion, there's always going to be a little bit. We're dealing with money, but don't let emotion take over your SPY T trading, because it's really going to make a big difference, honestly. You know, if you can just stay steady, know there are going to be down days, a couple down days, some good up days, and at the end of the month, we take a look, examine what went right, what went wrong, and do better the next month. But look at it as a month at a time. One of the things we look at, we have the $1,000 rule. I would take a look at some of the videos on that. Basically, with a SPY T trade, if it was over $1,000, we knew that, look, it doesn't matter if the indicator's right or wrong. If it's over $1,000 for a SPY T trade, we're not gonna make any money even if we are right. So those are some of the things we have to think about and consider along the way. What are some other indicators that we can use rather than just the SPY tomorrow indicator? Well, there's so many different ways to approach it. I mean, we can flip a coin, or we can use some technical indicators, or use our understanding of the news and economics that are going to come out the next day. If we know that, look, you just have good insight, you've done your research, you have an idea that the economic report tomorrow is going to do this and the market most likely will react another way, then hey, trade based off of that. It doesn't matter if the indicator says up or down. If you feel like you have a pretty good track record on specific economic news or specific earnings or specific information, follow that, especially if you have a good track record with it. So consider that. I mean, you have some really good insight into the world in specific areas. Take advantage of that, especially if you're doing good research along with it. But you can also use the MACD. You can consider money flow, put to call ratios. There are a number of things you can use in combination. Some people within the SPY Tomorrow community will, they have their own signals that they use and then compare it to SPY Tomorrow. And if SPY Tomorrow and their signal concur, they're more aggressive. And if it's not, then they're less aggressive. It's a good money management scenario, kind of like we have with our confidence indicators and the grand pressure measurement. I mean, that gives us a sense of how much we may want to put in or not. Again, if it's a high confidence level, we may be more apt to put a little bit more in. If it's a low confidence level, we may put less in. And maybe there's an algorithm within the SPY Tomorrow community that you've been watching. You say, man, when the indicator says up and this algorithm also is pointing the right direction or the same direction, we tend to have a good day or a bad day the next day. So this is information that you can also correlate yourself along the way. Can you trade over weekends? Yes, you can. And the best trades, the SPY TA trade holds over the weekend. The directional trade can hold over the weekend, because remember, These are short term. Usually when we're doing over the weekend, we maybe have expirations that are 7 to 10 days out, a little bit longer expirations, because last thing you want is one that's 4 days out that is exercised on the Monday and you bought on Friday. I mean, it could be worthless by the time you hit Monday. So I would definitely be aware of that. And I've made that mistake. I assure you, I have made that mistake at times, especially when we have a long weekend, like a holiday, Friday market close, and I totally forgot. And then I bought an expiration on that Monday. Oh my goodness. But I've actually won just fine a couple times, but that was pure luck. That was pure luck. So you have to be aware that some of these SPY-T trades, and this is something that we had a lot of conversation during the fall, that some of the SPY-T trades were not holding over the weekend. SPY-TS, SPY-TC, D, even SPY-TB were having trouble over the weekend. So I would say SPY-TA or directional. But some people were also using leveraged ETFs, and they seem to be working out pretty well too. And if you're a little bit more conservative trader, you might want to consider a leveraged ETF. You can also buy the stock rather than buying the options, which, in other words, when you're buying the stock or a leveraged ETF, which means, let's say there's the TQQQ, which follows the QQQ. Well, it's a 3 times leveraged ETF, which means if the QQQ went up, you would make 3%. If it went up 1%. So if the QQQ went down and you had the TQQQ, if it went down 1%, you would lose 3%. But it's not the 30% or 25%, some of the big, more aggressive moves we might have with the options. So, if you're we've done studies, and using the T and the SQQQ, so let's say the indicator said down, you could use the SQQQ for short. And so you'd make money if the market went down with that ETF. Again, went down 1%, you would make 3% on your money. So there are ETFs, there's some 2 times leverage and 3 times leverage. So those are not bad over the weekend too. So these are all things you can consider along the way. And if you're much more conservative trader, you're not so sure you want to use the system, consider those ETFs or consider buying the stock. You probably have to buy it in larger amounts, but that's fine. If you have it, you have it, and you can play the market that way. There are a lot of ways to approach SPY-T trading. You don't always have to use exactly the system that we have. You can always modify it to fit your trading style and temperament, and make sure that it is a system that will allow you to sleep at night. That's certainly important. Do you make money every single month? There have been some months I've not made money, and that's to be expected. I went a long time where that was never the case. However, last fall, there happened to be a couple months that I did not make any money. Generally, I was making a good solid 25, 50, 100% per month on average. But with some issues that I had, plus some experimentation, I've also done experimentation during the month. I don't want to use that as an excuse, but sometimes I'm trying new things to help figure out different ways to approach this and share it with the community. And I've had some months where I did lose. But the thing is, over the year, I'm looking pretty good. And I generally look at it, as I said, based on a month, in short term over a week, but not daily. Don't drive yourself crazy looking at overday. You're not a success or failure based on one overnight trade. You could have 2 or 3 go bad on you, but you'll make it up when you have a big trade later in the month, and all is well. So just stick with the plan. Don't start modifying things. Only start modifying things a little bit maybe when you're finding success and you know exactly why. Not modifying things out of emotion that could put you in a bad situation. Next one, can you trade for me? No, we can't trade for you. I am not a financial professional. I don't have any license. I am an internet geek. I am a media company owner. I love playing with numbers and algorithms. I play with algorithms all day long. I experiment and I test, and this is what I've applied to the stock market. And it's working out pretty well. I have an indicator that's more right than wrong, and I'm developing a system that seems to work pretty well. It gives us a hedge and a way to amplify our profits and minimize our losses. And what else can you ask for? We are always looking for ways to improve it. Your ideas are certainly very helpful. Some of our best ideas have come from community members, and like using the QQQ ETF or the TQQ, the leveraged ETFs. Those ideas have come very well. Considering waiting maybe 15 minutes before you trade, learning how to be more patient. Some of those ideas on how to be more patient and maybe when to look for that trade, all that's come from the community, along with some other wonderful information and ideas as we try to support each other. Okay, what is the accuracy after 30 minutes? And also, in the same vein, can you keep a trade longer than 30 minutes? And the answer is yes, you can, but remember, our expiration trades are usually 4 to 7 days out. Theta is not on our side. And I've mentioned that before, and I'll say it again. Time is not on our side here. And if you can get out, great. But if you are following up, great, wonderful. If you're following, it's going in your direction, you're making more money or minimizing a loss, then stick with it. But try to get out as soon as you think that trade is over with. You'll get better and better over time. And can you hold on? In other words, we cap our success, win ratio at 30 minutes after the market opens. But it's very common that maybe the market starts low and works its way up over the next hour, hour and a half, and we make money. The indicator said up, and the market went down. There was some news, something happened. We sold the put and rode those calls all the way up into profitability, or the other way around. The indicator said down. We bought 2 puts and 1 call, and the market went up, and then we sold that call and followed the puts all the way down. That takes time and practice, and as you get better and better at that, maybe the indicator was 70% correct that month, but you ended up being 80% correct or 80% profitable, profitable 80% of the time, because you learn how to do this. Now, look, if the market went down when the indicators went up, it could keep going down. And so you have to learn how to use the indicators that work best for you. Maybe it is the MACD, maybe it is money flow or VWAP or some other method. I use VWAP quite a bit. That's my main one, whether to see if I want to continue up or down. And I'm getting better and better. I have a lot to learn in terms of being patient and reading the market. We all have to learn how to do that. And so we're continuously improving our skills along the way so we can continue to maximize our wins and minimize our losses. And as we get better and better, that happens. So it is a skill. SpyT trading ultimately, as easy as it is to understand, is a very basic trading philosophy. Just like anything that's easy, skill, can maximize that and improve it greatly. So, so going with that theme, so if we end up with a day where it starts low and our indicator said up and we're following it up, that could take that hour, hour and a half, but we would be wrong. The indicator would technically be wrong. So that would be a wrong day against our average for the month, although we made money. So that's how that works. Should I paper trade? Yes, absolutely. And you can consider paper trading, doing a 30-day challenge using the SpyT A method or SpyT AH method, and test it out for a month, paper trading, and seeing if it really works for you, if this is the type of trading that you would like to do to grow your portfolio. So yeah, paper trading is a good way to test it out first before you put in your hard-earned money. But make sure you put money in you're willing to lose, and every trade you should expect it's always a possibility I could lose it all. That really keeps your mindset in the right place to not overextend yourself. I mean, if you have to make so much money in a specific period of time, this is not the way to go. No trading platform, day trading is not the way to go. This is something you want to build your portfolio over the long term using an aggressive method, and then diversify as you continue to win. That's what we're trying to do here. We're not trying to win, get rich quick. Even though this is an aggressive style, we want to be sane about it. We want to be realistic about it. It is an aggressive trading style. We're going to have win streaks. We're going to have losing streaks. But ultimately, the math is on our side. And that's our mantra. The math is on our side. And don't let emotion take us out of the game. Okay, do I need a special account? Well, you need a brokerage account because, again, we can't trade for you. You don't give us your money to trade. You trade the money. And you should be familiar with options. You should be familiar with trading options. And if you're not familiar with trading options, well, then you should definitely paper trade. Or consider the ETFs. Maybe trade the stock overnight, or perhaps the ETF itself, or a leveraged ETF, again, like the SQQQ or the TQQQ, or a leveraged ETF for the SPY, or another type of exchange traded fund. Okay, wow, we're near the end here. How much is this monthly? Well, it's $99. Some of you may see different amounts, just under $99. We just use that for tracking. So if you're lucky, maybe you get a nickel off or 10 cents off. That's just kind of a tracking component. It's everyone, it's $99 is the maximum anybody will pay. You are locked in. And if we raise the prices in the future, you're always locked in at $99. Your price will never be upped, and you can cancel anytime. But if you're making money, why would you do that? So that's my philosophy. If you're making money, why would you cancel? But it is easily accessible within the members area. There's a portal there that you can go and you can adjust or pause whatever you feel you need to do. You have full control of your account, and that we want people to be comfortable with this. It's just monthly. Now, if you get in there, you sign up to the point in which you register, I can give you a refund. But if you register and you're in the system, well, then I consider that for the month. Because it's the sensitivity of all the information that's in there, then we can't offer refunds. But you can cancel at any time. So that's the general rule. If you haven't registered, just email me, and I'll be happy to refund the money if you had a second thought and decided not to do that. Or there's a mistake. Sometimes people make mistakes. I'm easily accessible, rosh@spytomorrow.com, and I am always happy to help people out. All right, so can I offer you a guarantee? No, of course not. Of course not. It's mathematical speculation. I have no control over what's going to happen overnight. World events, weather, economic news, no control over that. I can only do one thing. I can show you what the pressure is at the end of the trading day. I can show you some pressure through the day. We have obviously our hourly and half hourly pressure, but we have our main pressure at the end of the day that correlates to how the market might open the next day, which has an excellent track record. And we offer different strategies and styles of trading that will help you amplify those gains and minimize those losses. That's what we're all about here, trading the overnight gap. An opportunity that I think is great for those of us who don't want to day trade but want to be aggressive and want to continuously to improve a style of trading. So it's not just, it's just not cookie cutter every day, do this, and feel like you have no control. You do have some control. You have that control, learning how not only to buy, but making the trade, selling. That is the trader that learns how to sell, that's the one that's going to have the most success. I often say that you can give 10 traders the exact same information and have 10 different results with each of those traders. So it's up to you to learn how to do this well, get involved in the community, and hey, I look forward to seeing you on the inside of SPY tomorrow. It's been wonderful sharing with you in the SPY T webinar 2023.